More than 1 million people across 14 states are about to lose their supplemental unemployment benefits. And sadly, for a lot of these people, they're going to have to go back to a job with a wage that pays much less than what they were making before they lost their job. Let's take a look at a story here. This is out of stltoday.com. Quote, "I have no idea what I'm going to do," unquote. Missouri's unemployment cuts puts jobless on the clock. So these people are scrambling to try to find work. Now, the officials and lawmakers out of these states, many of them are citing the reason for this as the labor shortage. So they feel like we feel, and we've uncovered the evidence here, that the enhanced unemployment benefits are discouraging people from going back to work because, right, we all agree, who wants to work for a paycheck when you can sit home and make just as much or more, or in some cases even almost as much? Even if you're making an average of $15 an hour sitting at home versus going to work for $16 an hour, a lot of people will choose to just sit it out for an extra dollar per hour. All right, but here's what a lawmaker here, looks like maybe the governor there out of this state, out of Missouri, had to say about the reason for cutting out these federal supplemental unemployment benefits. Take a listen.
Many business owners and employers across the state are still struggling, not because of, but because they can't find people to fill the jobs. To help address this labor shortage, I have directed the Missouri Department of Labor to end participation in all federal pandemic-related unemployment benefits effective Saturday, June the 12th. The termination applies to all 6 federal pandemic unemployment insurance programs. While these federal benefits provided necessary financial assistance during the height of COVID-19, they were intended to be temporarily.
So there you heard it. So essentially, these people agree, and this man agrees, that the supplemental benefits discourage people from going back to work. So now what type of jobs are going to be available for people that are forced to go back to work? And they're not being forced to, but they're certainly being incentivized now to go back to work because of the loss of the supplemental benefits. Well, sadly, a lot of these people are going to have to go back and find work in lower paying industries than they had worked in previously. And sadly, out of the story, it outlines this exact situation where she says she has no idea what she's going to do. This Missouri resident, she's 57 years old. She previously worked at a sales job that paid her about $50,000 in salary, and she cannot find work in her same field, her same industry. So she's going to be forced into a different line of work. And odds are, with all the jobs that are coming back, which are mostly lower paying service sector, leisure, hospitality jobs, many of them are part-time jobs because a lot of these travel industry sectors, hotels and things like that that are hiring are not even hiring for full-time. The same with a lot of the fast food jobs. But if you look around at all the help wanted signs, it's a lot of times at retail stores, fast food restaurants, and those types of lower paying jobs. And we looked at those salaries a few episodes ago. We know that the typical range is between $15 and $16 an hour. And it's really hard to get by on that type of wage right now, especially when the money printers are pushing inflation like never before. They're pushing up asset prices. They're keeping the markets propped up, everything from the stock market to the housing markets. Banks are allowed to loan out endless amounts of money created out of thin air, which creates further demand. Of course, most of you know that the more people that go out and borrow money, then the demand side is tilted, and therefore you're going to see rising prices. So more loans, more easy money from the banks, no reserve requirement for the banks equals rising prices. And here's a quote out of this article from this Missouri resident. Quote, "I cannot afford to work at a restaurant. I don't have the background, and I can't live on it. If June 12th comes and I don't have something, I have no idea what I'm going to do." All right, so there's one person, and it's probably going to be millions of people just like her that are going to have to find what they're going to do. They might have to go move in with a relative, move in with maybe get a roommate, find a lower priced area to move to, and those are beginning to get few and far between as far as low priced areas to live in. Regardless of what you're being told from the mainstream business news channels, things are not looking so good for millions of people, and the middle class is beginning to look like it might be completely wiped out. But there is a handful of people that are doing much better in this current situation. We know the millionaires, multinational mega corporations are doing better than ever. And this is part of the wealth transfer. How many small businesses were forced out of business and never came back? Well, a lot of them. So now the mega corporations, their market share has increased. And we know that Bezos and the world's richest people, especially the top 10%, have all increased their wealth exponentially during this time. Now, some people will say that that's just the way the ball bounces. Other people would say that there's a more dark, sinister plot behind all this. And I would just ask you to look at it from this perspective. How convenient is it that every time something bad happens, that it always enriches the already rich, and it further punishes the people that are already struggling financially? All right, so we're going to have to keep an eye on it for you. Again, 1 million people across 14 states about ready to lose their supplemental benefits. And when you combine that with the possible expiration of the moratorium or the prevention on evictions, look out. It's about ready to get real ugly real quick unless something else comes in to try to kick the can further down the road. But we'll have to keep an eye on it for you. Let's talk about new jobless filings for the past week. This just out of CNBC. 473,000 new jobless filings in just a week, which is still an enormous number. When you multiply that by 4 weeks, which is approximately 1 month, still going to be looking at about 1.9 million new jobless filings every month, which still about doubles the new jobs that are being implemented. All right, so it's still a disaster, still a nightmare that's continuing to unfold. There's not much light at the end of the tunnel. The people that created the problem are coming in with their solution, which is more of the same, more money printing, more inflation, more market propping, more endless bank liquidity so loans can still keep being pumped out to the masses, which is going to further inflate the bubbles. You guessed it. So this is going to turn into a nightmare, folks. I do have my fingers crossed. I'm praying for everybody out there that needs help at this time. Continue to prepare, hedge your bets against this inflationary environment. You might want to find some alternative assets because just sitting in the dollar is going to be a shoot yourself in the foot type of move or type of strategy. Unless we see something that comes and pulls the plug out of the money printers, then you're going to see massive deflation if the money printing is ever reined in, if they stop monetizing the debt. If banks are ever held to account as to how much they can loan out versus how much they have in deposits, if any of those things happen, then look out below. It's going to be deflation, but we don't see anyone talking about that. So I would expect inflation continuing going forward, probably all the way into hyperinflation where the dollar gets absolutely destroyed. Hedge yourself accordingly, everybody. Hope you're doing well. Keep stacking. Stay well, stay safe, stay prepared. Until next time, talk to you then. Bye for now. Peace.